What is an ETF, Exchange Traded Fund? An exchange traded fund is a pooled investment vehicle that owns a basket of securities that can be comprised of various stocks, bonds, commodities, and/or currencies. The primary benefit of ETFs arises from their diversification into a broad array of securities, with a secondary benefit being the tendency of ETFs having lower fees than other investment funds. ETFs are bought and sold on recognized stock exchanges, comparable to that of publicly traded stocks on those same stock exchanges. The composition of securities in an ETF is driven by the intended investment objective set for the particular ETF. ETFs are structured to be either passive or active, although certain ETFs do combine passive and active traits. Passive ETFs are constructed to track a benchmark or replicate its performance by holding the same securities as an index in proportionate amounts. A passive ETF does not seek to exceed the benchmark or index, but rather to follow them as closely as possible. Active ETFs are those where a fund manager makes the investment decisions to achieve an objective. Ongoing decisions regarding the ETF's portfolio construction are made to attempt to outperform the stock market. Some of the most popular ETFs have been SPDR S&P 500, the oldest surviving and most widely known ETF that tracks the S&P 500 index. iShares Russell 2000, an ETF that tracks the Russell 2000 small cap index. Invesco QQQ, an ETF that tracks the Nasdaq 100 index, which typically contains technology stocks. SPDR Dow Jones Industrial Average, Diamonds, an ETF that represents the 30 stocks on the Dow Jones Industrial Average. Sector ETFs, ETFs that track individual industries and sectors such as oil, energy, financial services, real estate investment trusts, and biotechnology. Commodity ETFs, these ETFs represent commodity markets including gold, silver, crude oil, and natural gas. Country ETFs, funds that track the primary stock indexes in foreign countries, but they are traded in the United States and denominated in U.S. dollars. Examples include China, Brazil, Japan, and Israel. Others track a wide breadth of foreign markets, such as ones that track emerging market economies and developed market economies. Thank you.